All right, let's dive in. Today we're taking a deep look at Plug Power Inc. They're making some serious waves in the clean energy world, specifically with hydrogen. We've got a ton of research piled up, ready to analyze if PLU is a stock worth your investment or one to avoid.
What's fascinating about Plug Power is how ambitious they are. Not just dipping a toe into the hydrogen economy, they're going all in, trying to build a complete hydrogen ecosystem.
So not just fuel cells, but everything. That's a big goal.
Yeah, exactly. They're doing it all, manufacturing hydrogen production plants, coming up with storage and transport solutions, even building out the refueling station network. It's a full package for anyone wanting to switch to hydrogen.
Okay, lots of moving parts, but that also means multiple avenues for revenue, right?
Exactly. You've got revenue from the direct sales of those fuel cell systems, plus all the infrastructure that goes with them. But they've also got a smart subscription model for things like maintenance and fuel delivery that guarantees a steady income stream.
So like the classic razor and blades model, but for clean energy. That's clever. What about their products? What are they actually making?
Well, one of their big successes has been the GenDrive fuel cell systems for forklifts, replacing those bulky old batteries with something much cleaner and more efficient.
Wow, so those forklifts zipping around warehouses could be powered by Plug Power.
Yeah, and that's just the start. They're also working on some really powerful stuff, like megawatt-scale fuel cell systems designed to power data centers, for example.
Okay, so thinking big, what's the market for hydrogen fuel cells looking like? Is there even enough demand for this kind of all-in strategy?
Projections are pretty optimistic, actually. The market's expected to hit a massive $11 billion by 2029, growing at a rate of over 16% per year.
All right, so there's potential there, but it can't be all smooth sailing. What are some of the challenges Plug Power's up against?
The big one is cost. Producing hydrogen and building all that infrastructure, it's expensive. Plus, you've got increasing competition in the clean energy space. They're not the only ones vying for a piece of this pie.
So how do they plan on tackling those challenges? What are some of Plug Power's advantages?
Well, being an early mover in the hydrogen space gives them an edge. They've had time to refine their technology, build relationships, establish a brand. They've got that experience.
So they've been there, done that. Anything else?
They've also been smart about their business, vertically integrated. They control a lot of their own supply chain.
Ah, so instead of relying on a ton of suppliers, they're handling a lot of it themselves.
Yep. Gives them more control over production, cost, and in the end, their profit margins.
Smart move. And I've heard they've also secured some pretty impressive partnerships.
Definitely. They've partnered with some major companies, including Amazon and Walmart, who are already using their technology in their warehouses.
Okay, so we've got a company with a bold vision, working in a market that has a lot of potential. They've got the experience, smart strategies, and big-name partners. Sounds promising so far, but I know there's always more to the story. Before we get carried away, what about the management team? What can you tell us about them?
Well, their CEO, Andy Marsh, definitely has a clear vision for the future of hydrogen, but their execution has raised some concerns. They've consistently missed their financial targets.
Oh, that's not a good sign. Missing projections could mean problems with their forecasting or maybe even bigger issues with their operations. Are we talking growing pains or are there more serious red flags when it comes to their financials?
Their track record raises some eyebrows. We're seeing a high cash burn rate, meaning they're spending a lot without bringing in enough revenue to cover it. Having to rely on outside funding to keep the lights on can be a bit worrying.
Yeah, that is a bit concerning. Burning through cash that quickly could mean their business model just isn't sustainable long term. And hasn't there also been some issues with their accounting in the past?
Unfortunately, yes. There were times they had to restate their financial statements, even had the SEC stepping in. A lack of transparency and accuracy can be a red flag for investors.
Definitely not what you want to see. So missed targets, a high cash burn rate, and accounting issues. What's the situation with their finances? Let's take a closer look.
To understand what's going on, we need to look at how they're allocating their capital. They're putting a lot of money into expanding their hydrogen production and infrastructure, which makes sense for their long-term goals, but their current financial performance does raise some questions about how effective these investments are.
How so? What's raising those red flags?
Their gross margins are negative. They're losing money on every product they sell right now.
Wait, losing money on every sale? That doesn't sound sustainable at all.
You're right, it's not. And we're not talking a small loss either. Their gross margin is a staggering negative 82.46%.
Wow, that's a huge warning sign. So what about overall profitability? Are they making any money at all?
That's the big question, and sadly, the answer is no. Plug Power hasn't managed to turn a profit yet. They're in the red, with negative operating and net income margins.
Okay, losing money on each sale, burning through cash, and haven't turned a profit? This is starting to sound pretty bad. Is there anything positive about their financial situation?
Well, their revenue growth in 2023 was a decent 27.07%, which at least shows there's demand for what they're offering.
So at least people are buying, but if they're losing money on each sale, that growth doesn't mean much when it comes to profit, right?
Exactly. And that's the big challenge Plug Power needs to figure out. They need to find a way to become profitable quickly. Otherwise, all those revenue numbers won't mean much in the long run.
So we've got a bit of a puzzle here. A company operating in a sector with a lot of potential, making moves to be a leader, but their financials are raising some serious concerns. It makes me really curious how the market is reacting to all of this. But before we jump into that, I want to tease something pretty surprising we found out about Plug Power's history. Their age might surprise you. We'll reveal it all later in the deep dive. Stay tuned.
You'd think with those financial issues, the market would be steering clear, right? But it's not that simple. Sentiment on Plug Power is actually kind of mixed.
Really? So some investors are still willing to take a chance on them despite all those red flags. I'm curious why.
It seems like there's this push and pull between those who see the company as a potential leader in the hydrogen economy and those who are more cautious, looking at their financials.
So some are overlooking the losses,
Okay.
focusing on the long-term possibilities, while others see those negative margins and just walk away.
Yeah, exactly. And that uncertainty shows in the range of analyst price targets we're seeing. Some are setting targets as low as $1, while others think the stock could go as high as $18.
That's a huge gap. Sounds like even the experts can't agree on what to make of Plug Power. Anything else that might give us a better idea of how the market views them?
Well, the short interest is particularly interesting. Right now, over 28% of Plug Power stock is being shorted.
For those of us who don't speak Wall Street, can you explain what shorting a stock means?
Sure. Basically, when you short a stock, you borrow shares and sell them right away, hoping to buy them back later at a lower price, pocketing the difference. You're betting that the stock will go down.
So with a high short interest like this, a lot of investors are expecting Plug Power to drop. That's not a good sign.
You're right. It definitely points to a lack of confidence in Plug Power's ability to turn things around.
And one analyst even pointed out that Plug Power might be too reliant on government subsidies and issuing new shares just to stay afloat. That's pretty rough.
It's harsh, but it highlights a real risk. What if those subsidies go away, or investors don't want those new shares? Plug Power could be in a tough spot.
A divided market, some big bets against them, and reliance on outside support. Let's switch gears a bit and look at who's actually holding on to Plug Power stock. Who are the players backing this company?
A large portion, around 43.8%, is held by institutional investors, the big investment firms, pension funds, those types.
So the big players. What does their involvement tell us?
Well, institutional investors often have a longer-term perspective when it comes to their investments. They're not as worried about short-term changes, might be more willing to stick it out, ride the waves if they believe in the company.
So they might see something in Plug Power that others are missing. What about the people running the show? How much are they invested themselves?
This is where it gets interesting. Insider ownership. The amount of stock held by the executives and board members is pretty low, only about 2.29%.
That is low. Makes you think if they really believed in Plug Power's future, they'd be investing more of their own money.
Exactly. If they're not willing to bet big on their own company, why should anyone else?
Okay, so we've got a mixed bag here. Divided market, long-term institutional investors, and a management team that isn't exactly putting their money where their mouth is.
It's complicated. To understand it better, maybe we should do a SWOT analysis.
A SWOT analysis. Sounds good. Can you remind our listeners what a SWOT analysis is?
Of course. It's a way to evaluate a company's position, looking at their strengths, weaknesses, opportunities, and threats.
So weigh the good against the bad, the potential against the risks. Let's do it. What are some of Plug Power's strengths?
Well, their position as a leader in fuel cell solutions is a big one, especially for material handling equipment. They have a strong brand, a first-mover advantage, and they're actively building up their green hydrogen production.
And don't forget that vertical integration. Controlling their supply chain gives them an advantage. Could mean higher profits later on.
Right, and we can't ignore the growing global demand for fuel cells. It's a massive market that Plug Power can tap into as we all move toward cleaner energy.
So, lots going for them. But we know they have weaknesses too. Where do they need to improve?
That history of financial losses, the negative cash flow, that's a big weakness. They're spending money fast and they haven't been able to become profitable. That's worrying.
Yeah, those negative margins are a big concern. Plus, they're relying on government subsidies. Makes you wonder what happens if those subsidies go away.
Exactly. And we have to remember the competition in the clean energy sector is fierce. They're up against big established companies and new startups. Everyone's fighting for market share.
So they need to stand out, show investors why they're the right choice.
But even with these challenges, there must be some exciting opportunities for them. What are some areas where Plug Power could really grow?
Well, the green hydrogen market itself is expected to grow rapidly. That's a huge opportunity for them.
And the uses for hydrogen fuel cells are expanding. It's not just forklifts and data centers anymore. We're talking trucks, buses, even homes and businesses potentially running on hydrogen.
Absolutely. And government support for clean energy could be a big boost. Think tax breaks, grants, incentives. That could help them a lot.
So, big potential for growth, but we also have to consider the threats. What could derail Plug Power's plans?
Competition, like we talked about, is always a factor. New technologies could pop up, making their current stuff obsolete.
And what about supply chain problems? Shortages. That could really impact their ability to keep up with demand.
And then there's the possibility that hydrogen just doesn't catch on as fast as we think. Or maybe the infrastructure needed for widespread use takes a long time to develop. A lot of things to consider. They're in a fast-growing market with a lot of potential, but they're facing some very real obstacles too.
It's a balancing act for sure. Whether they can overcome these challenges and reach their full potential, well, we'll have to wait and see.
We've done a deep dive here, looked at their business, financials, the market's opinion, and their strengths, weaknesses, opportunities, and threats. So what's the verdict? Is Plug Power a smart investment or a gamble? We'll share our final thoughts and reveal that interesting fact about their history in just a moment. We've really gone deep today, haven't we? Explored Plug Power's goals, their tech, the partners they've got, and of course their financials.
A real roller coaster it's been. I mean, you see this company working in a sector everyone thinks has huge potential, and they're really making moves to be a leader in this whole hydrogen economy.
But then you see the financials, and it's hard not to be at least a little concerned. All those losses, those negative margins, the cash burn, it's a lot.
Yeah, you got to wonder. It's like they're building this incredible hydrogen-powered engine, but they haven't quite figured out how to get the fuel running efficiently.
So is Plug Power a risky bet on clean energy's future, or a company about to fall off a financial cliff? That's the big question.
Tough one to answer. Really comes down to how much risk you're comfortable with and your belief in their ability to turn things around.
But before you decide, got to share that surprise I mentioned about Plug Power's history. Ready?
Lay on me.
Plug Power was founded all the way back in 1997.
Hold on, 1997? Seriously? I thought they were a much newer company.
Right. It's kind of wild to think about. They've had more than 2 decades to sort things out, to build a business that makes money, and yet they're still struggling.
Changes things a bit, doesn't it? To know they've been around for so long and still have these problems makes you wonder if they can ever really solve them.
So I have to ask, does this change your view on Plug Power at all? More or less likely to invest now?
Well, it definitely brings up some important questions. Are they pioneers ahead of their time, waiting for the world to catch up? Or is there something fundamentally wrong that's stopping them from becoming consistently profitable?
Those are the questions, and there are no easy answers. Unfortunately, no crystal ball here. We can't predict the future. All we can do is give you the info to help you make a decision.
We've shown you the good and the bad, the potential and the risks. Now it's up to you to do your homework and figure out if Plug Power is right for your portfolio.
And don't forget, all the sources we used are linked down in the description. Check them out, do some more digging.
We always love hearing from you guys. Leave a comment below. Let us know your thoughts on Plug Power. Think they can make a comeback? And if there are any other companies you want us to do a deep dive on, let us know.
And to keep learning about the stock market and find more potential investments, hit that subscribe button on the Stock Analytics AI YouTube channel. New videos coming out all the time, packed with insights and tips to help you navigate the world of investing.
And of course, as always, gotta remind everyone that all the info we shared today is for education only, not financial advice. Investing always has risks. Do your own research, talk to a qualified financial advisor before making any investment decisions.
Thanks for hanging out with us on this deep dive into the world of Plug Power. Until next time, happy investing.